Hello, this is Coach Mike from winningstockcoach.com. Going to start things off with our market overview video for the week ahead, the week beginning August 4th. First full trading week of the new month, last month of summer, and coming off a very bad week. But hey, let's face it. You've had these market overview videos that have set out to give you critical values on the indices to get an idea of how your stocks could trade in relation to them. I hope this last week showed you how important it is to understand how no stock is stronger than the markets and how those stocks correlate with what the indice charts are doing. Over the past few weeks, we've had a couple high side values we were watching. The one we'd been talking about the last couple weeks was how we got just shy of this 1993.76 target area. Just shy, $2 shy on basically a $2,000 stock when you're talking the price. So pretty darn close, I'd say. And in last week's video, we talked about the necessity to hold above 1963.04. If you remember in last week's video, I said if we were to fall below 1963.04, I believed we would make a very rapid move down towards 1908.47. Now, let's look at a couple of these things. You're going to see me clean up the chart here in front of you. Because we dropped below the zero line, the support point of that, we need to take that off. And because we broke this one, yet exceeded it, or then fell below it, that one needs to go. I'm going to leave this yellow trend line up there for now because I use that for retest points. But let's look at things. 1908.47 was where I was looking at if it fell below 1963.04. And what I said in last week's video is we had to watch for it to hold that, because if it failed it, it would make a very rapid move down to 1908.47. In last week's video, I said that if you see the S&P 500 make that move, long-term positions that you've been in for some time, you may not need to worry about those. But if the 1908.47 failed, it could get quite a bit uglier. Well, I'll tell you what, never have I had such good email feedback about a market overview video that I've been doing, and for 7-8 months now. I've put them out every week, and I've been within 0.5% of each high and each low in the S&P 500 ever since. I called really close to the highs with the DJI, the RUT, and the COMP. I'm very good with the targets, and it's not to brag on that because I'm humble about it. I use these things to make money, and I want you to use them too because they will help. So let's look at what we got. As we clean up our chart and we start to remove what is irrelevant, you start to see that if that 1908.47 does not hold, and I were to go back here on a weekly chart for the S&P 500, the SPX, you'll see that the green trend line has been pretty strong for quite a few nice entry points along this uptrend. And outside of that, which is also the swing high point before this last run out or run up, and if we were to fail below that, quite literally, we don't have a lot to keep us from going farther down. That's the important thing for this upcoming week. Let's go back to the daily chart, and I want to explain a couple things to you. First off, very rarely do stocks or the indices go straight up or straight down. And typically, the harder the harder move it makes upwards, the better pullback it gives you, and the harder move it makes downwards, the better pullback it gives you. Experienced traders might be familiar with a term called the 50% rule, and it's based on a retracement of a move and whether that retracement exceeds 50% of the move already made. Now, what that would mean is you could use a simple tool like a Fibonacci retracement, and you could mark from your high point up in here to your low point, and I always go on opening and closing prices, and you would see that on this move the S&P 500 might come up to 1956.61, or somewhere thereabouts. And it would actually be the direction it moved from there that would give you the indication as to whether or not we could continue upwards. Now, if you start to see a bounce tomorrow, I think you have a legitimate target area to trade for. I don't want you to get your hopes up thinking that it will make a higher high until it breaks that 50% area. Am I going to sit here and try to say whether it will or won't? I'm actually not, because that's not how I trade. I trade what they do. I don't expect them to do what I want them to do. And because of that, I make successful trades. Now, seeing this, if it starts to bounce on Monday, or at any time during the week, so long as it holds the support level, we would have to watch for a high area around the 1956-61 area. And if it began to pull back from there, we would have to exit new long entries. If you're a bear and you're waiting to short, that might be the area where you'll be best fitted to short, is when it makes what's called a dead cat bounce. Why do they call it a dead cat bounce? Well, even the worst stocks in the world, you take a dead cat, throw it off the Empire State Building, when it hits the cement, it's going to bounce. And even things that are falling will bounce. And they call those dead cat bounces. And the 50% rule helps to accurately portray the area that bounce might happen to. But I'm going to go with what has worked in the targeting system that we've used, Fibonacci extensions. And I'm going to go from the last low to the last high into our current low. Now, so long as Friday's low remains the low to be seen and we make an upwards move, I'm going to be looking around 1952.17. That's my area of interest. That's what I want to be watching for, because to me, a move up to that area and a pullback from is your opportunity to go short. I have to be quite honest. Shy of coming down to this green line right here, I'm going to be a little bit hesitant on new long entries. Let me tell you another reason why. Over here, this is last August. Exactly 1 year ago. It was a bad month. And every time it looked like it could bounce, it didn't. But as we got there to the end of August, we started to pick up. September came, new month, new trades. It's the last week of summer. Things, summer trading, some things go weird. I always like to accumulate in the summertime. Makes for a good third quarter. But for me, I want to get the confirmation that any up move will be more than a dead cat bounce. And that means being a little bit patient, but being patient for opportunities that turn into higher probability trade opportunities. So those are the target areas we're going to be watching at first for this week. We want to watch 1952.17 if we make an up move. We want to watch still that 1908.47. And if we do continue, it doesn't have to continue very far down to break below that. And I'm telling you right now, going back to that weekly chart, on every major market pullback over the past year, since July of 2013, we bounced off of that green line. March was not a major market pullback. It just kind of had one bad week and came right back. January's big pullback. NASDAQ lost the highest percentage since the tech bubble burst in 2000. It's all over the news. We still bounced off that line. Government shutdown leading into October. Oh, the heroes came through in the 11th hour. Bounced off that line. The fears in late June about how tapering from quantitative easing could crash the stock market. And that's where we started that line. So until that line fails, we have to use that line for opportunities to look for long positions. And I'm going to tell you this. It's not to the line yet. So even though you might get an up move, we also have to look at the fact that we just had a lower low from the prior low, which more times than not will lead to a lower high on the first move from it. If this was going to be the bottom, we would get our lower high, it would pull back a bit, make a lower low before moving again. And when it breaks that high from the lower high that would ensue from here, that's your confirmation for long entries. And if you trade with very simple disciplines and an understanding of chart patterns and technical analysis, you'll have more successful trades. Moving over now to the DJI chart, that's our Dow Jones Industrial Average. We had a couple different target areas because the chart had been really tightly consolidating, and we got really close, I'd say, still to that 17,209.51. We came less than 50 points from it on something that's over 17,000. So I'd say we came pretty close to it. We watched at the close of last week, had to hold the 1680.27, 16,960.27, I'm sorry. Monday, we dipped below it, but we're able to close above it. On Tuesday, when we failed, we began rapidly descending to the other supports. When we made our second support failure for the week, the day got even worse on Thursday. But Friday, we started out a little slow until the end of the day where we finally lost this other support. And remember last week's video, I said that if we gave up all three of those supports, even if we made an up move from there, I would begin anticipating the type of pullback we had in January. Right over here. It was a big pullback. And it's healthy for the markets to make a pullback like that. And that's what I'm going to be watching for and anticipating. Now, one other thing you're going to see me throw up here, just to give an idea, if we used market low from the pullback we had leading into the government shutdown back in October, and we went to January's low, because we've had bounce points off of this line already, we may find a bit of a bounce point from it again. That is something that you'll want to recognize as a potential support area, somewhere in that range, about 16,300 or so. And if things got bad and that line failed, I would believe very easily we'd give up 16,000 and hit down to that 15,904. Now, as far as a high side target, now that we've made a lower low for the DJI that could assist you on a bounce area, if it were to make an up move, remember, after the lower low, you have to anticipate a lower high. That'll still give you the opportunity, once it's confirmed, to make an entry. So, on a topside move, I'm going to be watching 16,783.25. That's going to be the area that's important to me for what would really be just one of those dead cat bounces. Moving over now to the Russell 2000. You remember a couple months ago, talked for a couple weeks while the Russell 2000 was down at its lows, encouraged you to be looking at small caps because they had the biggest upside potential. And so far they've fallen the most since, there was the target I gave you, 12.63. It just put one little price wick up above it. So I'd say, hey, pretty accurately called target. And just like I said last week, using the same tool to project that 12.63 target, I was able to project two lower targets. First was 11.25.53. And we said that if that failed, we'd probably eventually work our way down to 10.83.26. Now I want to remind you that when I put that 12.63 target up, it was by no means something that we would go straight up to. And you see that from this bounce area, we went up, we went down some, we went up, we went down some, we went up, we went down some, we went up again until we hit it. Since we had that 10.83.26 target placed, we've gone down and up some, down and up some, down and up just a little bit, and down some more. We could very well make an up move that does not change the overall downtrend. And just like we were talking about with the S&P 500 and the Dow Jones Industrial Average, we want an area where we can see where that might be, and I would look at 1139.55. We're going to go ahead and eyeball a potential upside target, which would just be a dead cat bounce target of 1139.55. Now, just simply because of how hard markets fell last week, it would not surprise me if we got an up move. But again, I would wait until the proper confirmations are made before jumping long into stock, unless we do get down to these longer term support areas that we've been talking about. All these interim support areas that are just made off of little brief moves, these target areas I've put up there, those are best suited for people that are doing very, very short-term trades. Your long-term trades, you want to view long-term support targets, long-term resistance targets, and go with what works. And again, the fact that these videos that I send out every week have been within 0.5% of the market highs and lows consistently every week, wouldn't be a bad idea to start listening to them. Now, in the past, there have been times where I've spoke of a chart as, stocks within this indice may have your highest upside potential. And now I'm going to talk about one that may have your largest downside potential, the COMP chart. This is your NASDAQ composite chart, the NASDAQ stocks, basically. You see that we had from these highs a double top area, and you can just visually see a low area. And if I went off the lowest close from this area, you see that's exactly where we closed on Friday. If we were to fail that area, which basically means go down lower than where you closed Friday, I believe you may see some of your NASDAQ stocks, some of those big name technology stocks, make a decent pullback, which is actually good because they've run so far lately that they need to pull back. Their valuations are so ridiculous that it's hard to fundamentally base trade entries in them, because you have to literally make your entries knowing that they don't make sense. But you know what? Ride the momentum, and that's what it's been. We need a decent pullback to settle out and make at least more fair valuations, even though probably never still be good, to give justification for those entries. Keep an eye on your technology stocks, the big name technology stocks this week. If they continue downwards, it could be a little ugly. But just as likely right now for them to go downwards is the bounce, because we closed right at the support point. It's just that this time I wouldn't look too high into the bounce, because you've already got two tops in the same area, which can limit your upside potential. Don't be afraid to go short on that support level failure. This is Coach Mike from winningstockcoach.com, wishing you all the best of luck in the upcoming trading week, and God bless.